Now joining us is Clinton Wilkins, our mortgage guru, and we're going to talk about what the Bank of Canada is doing or not doing. Clinton, good afternoon.
Good afternoon, Todd. How are you?
I'm well. You?
I'm doing just great. It's Wednesday. The sun's shining. We're in the middle of summer.
Yep.
I think everyone's feeling pretty good here in Halifax and probably across Nova Scotia with the further reopening today.
You got it. Okay, so the Bank of Canada is cutting its expectations for economic growth this year as it keeps its key interest rate target on hold at 0.25%. This is kind of the same thing. Nothing's changed. What's this mean for people listening? What do you want to tell people?
Well, it's good for everyone in a variable rate mortgage, obviously, or if you have a secured line of credit, like a home equity line of credit. It's great for everyone who has a product that's tied on to the prime rate. Holding the key rate is going to happen for a while. And I think maybe the last announcement, some economists were projecting that maybe it would start creeping up, mid-late next year. But there's some economists that are even coming out today stating that maybe the Bank of Canada will maintain that key rate low for a long, long time through the rebuilding that's going to be happening in the Canadian economy. The one thing that is notable is the inflation is basically at the levels that it was pre-pandemic, and even at the levels that it was back in May of 2011. So we're looking at basically inflation levels that we saw 10 years ago. So I think that's one thing to note. The government, the one lever that they have to reduce inflation in Canada is to increase the key overnight rate. So I think that's something that we're certainly going to be following closely is the inflation. And obviously that impacts Canadians almost silently. And obviously it impacts so many different things. But with the key overnight rate, really we are thinking, and the majority of economists are thinking it's going to stay low for quite some time.
Yeah, when you say quite some time, you mean months, years? What do you mean? What's your time frame?
I think likely it's going to be years. We may see some slow increases mid to late next year to stay some of that inflation, depending on what happens. I think there's still a lot of uncertainty. We are just getting in the clear here and with reopening in Canada, and I think that there's going to be quite some rebuilding to do before they're going to want to slow that economy. So I think it's a wait and see. We are cautiously optimistic, and I can tell you, Todd, majority of the borrowers that we are doing mortgages for today are going with a variable rate. In days gone by, about 60% of borrowers would choose a fixed rate product because they wanted that security. But obviously, we're in a very strange time with COVID, and I think it's the same thing with mortgage lending and real estate. And that's why more and more borrowers are doing a variable rate. The rates are very low. So on a high ratio insured mortgage, from the Canadian Mortgage and Housing Corporation, if anybody's buying a home and putting down less than 20%, they need that insurance. And a really good variable rate today is, in the 1.35% range. So a lot of borrowers are choosing to go with the variable rate because it's much lower today than where the fixed rates are. And it gives a lot more flexibility for borrowers. There's a lot changing in people's lives. The way we're living is changing, Todd. And with a variable rate product, you can break the term at any time with only 3 months interest. But the other really great benefit is you can always convert it into a fixed. So if we're in a position down the road, and I mean eventually these rates are going to go up, we can always convert from a variable into a fixed. And, if borrowers stay with their same lender while they're doing the conversion, they can convert into the fixed with no cost. So I think that's good news for sure.
Great stuff as always, Clinton. Thanks for your insight. We'll talk again.
Thanks, Todd. We'll talk to you soon.
All right, take care. Clinton Wilkins, our mortgage guru, mortgage broker. He's a specialist. And again, the Bank of Canada keeping that interest rate stable. And Clinton suggests that's the way it's going to be for a very, very long time.